Hey guys, John Polemy here, Actionable Intelligence. Today is Saturday, October 6, 2018, and this is a weekly report, but the focus this week is going to be on the recent UEC financing that happened last week, and this is going to be more of an educational podcast or video, and I can prepare yourself right now, because if you're a fanboy and if you are someone that doesn't really understand the difference between investing and speculating, and if you're somebody that has visions of sugar plums and that you're going to become an easy millionaire from uranium investing, I'm getting ready to disabuse you of this and now hit you upside the head with a 2x4 and introduce you to reality. One of the problems is with resource speculating, and it's not investing, is that people don't really understand that how difficult the business is, how capital intensive the business is, how cyclical the business is. Now, as a speculator, we can use these things to our advantage, and if we understand the cyclicality and volatility of the industry or the specific commodity that we are focusing on, we can make this our advantage. Conversely to that, if you do not understand that, you will get eaten up and spit out like a chewed up rag doll. And this recent financing with UEC led me to have this conversation. I got all kinds of emails and direct messages on Twitter, and people, well, Amir Adnani said they never had to raise money again until 2020 and blah, blah, blah. Okay, we're going to go through this, and I'm going to tell you the straight facts and what is going to happen to all of the uranium companies, probably with the exception of Cameco. So stand by, because I'm going to get the hate mail for this one, but it has to be said. Okay, UEC made an announcement on September 28th that they were going to do a $10 million financing. On 10/1, they raised the financing to $20 million because of the uptake they were getting. I started receiving emails and Twitter DMs about what did I think of this, and links to videos where the CEO said that he was not going to have to raise money until 2020. I also listened to the there was a conference call, like 15-minute conference call, I think on the 28th or 29th of September, that had the chairman of the board of UEC, former Energy Secretary Spencer Abraham, the CEO Amir Adnani, and Senior Vice President Scott Melby on the call, basically not really discussing the financing, not really discussing what the money was going to be used for, basically a reiteration of how wonderful the future looked and how positive things were looking in the uranium industry going forward. Basically boilerplate stuff that we already know about. There's been quite a bit of backlash, and I looked at the website today. I do not see that call playback anymore. It's not available. So I do not own UEC. I am agnostic towards it. Somebody asked me what I thought about it. I don't think about it. I don't know Amir Adnani. I've met him once at a conference. He seemed like a nice guy. He's a promoter. He's doing what he's supposed to do for his company. I have no bias towards the company. But as people continued to email me and DM me, I decided to jump into the 10 Qs. These are the quarterly reports, not the things that you see on the website, not the videos at conferences. This is the stuff that has to be filed with the Securities and Exchange Commission. And this will detail all the revenue, sales, all the financials, but it also has a section there called Management Discussion and Analysis. And that's where the company management has to be truthful as best they can, I think, and lay the facts out of where the company is and what things are affecting it, or what could affect it, and what the real risks are. Stuff that you won't see at a conference, and things you won't see in an interview by a fanboy up in Vancouver. So I took a little look at the 10Q. This is not something you won't see in any of the other 10Qs of a lot of other uranium mining companies or development companies. It's kind of the same things you'll see, but I just wanted to go over this because I think that if you're going to be in this business, you can't just sit back and randomly say, well, I think the uranium price is going to go up and I'm just going to buy these companies because it sounds good and they had a good presentation. You've got to understand what the risks are. You have to understand what you own. You have to understand what's really going on. Okay. Facts are the company has no revenue and is dependent on capital raises via equity sales and debt. That's right out of the 10Q. That's the management telling you that in the 10Q. Let me repeat that. The company has no revenue and is dependent on capital raises via equity sales and debt. They also, this next sentence is very important. The company continuing on as a going concern is incumbent on these capital raises. Okay? So why are people surprised that they're raising capital? They tell you in the 10Q that they issued in April. This is for April, guys. The last 10Q that came out, they told you that they have no revenue and that they're continuing as a going concern is incumbent upon continued financing. So what is the money for? So I looked into the 10Q. I didn't spend a lot of time, about an hour, and it's not that long. You can read the whole thing in a few hours. Basically, keep the lights on. Now, people don't like me saying that. They don't like that. Well, let's keep the lights on. I got an email from one of my subscribers. He had talked to a famous, had a correspondence with a famous promoter out there, and the promoter, you know, well, it's not just to keep the lights on. Well, it surely is because they have no revenue. When I say keep the lights on, I'm talking about general corporate purposes, salaries, expenses, etc. Now, in the 10Q, the company says, and I have it in italics here, our operations are capital intensive and we will require significant additional financing. We will require significant additional financing. They don't say how much. They can't really know right now, but significant is a lot. Now, they have no revenue and cash flow, so I think you could suppose from that that either they do a joint venture, they issue more shares, they get more debt. These are all possibilities, but they are all have commonality in that they will be dilutive to shareholders, equity holders. Now, also in the MD&A, there's a note about debt repayment. So back in, I think, 2015 or 16, the company took a $20 million loan from Sprott Resource. The debt and interest payments on this loan commence on February 1st of next year. Now, guys, that's only like 4 months from now, right? 4 or 5 months from now. And the nut on that is $1,670,000 per month, every month. And that commences in February. Now, if you don't have any revenue in cash and you've got some debt that you have to begin paying back, you need cash. They can't borrow more money, so they went to the equity market. This is out of the 10Q too. Failure to pay or get a waiver or renegotiate could result in default. Doesn't mean it will result in default. Doesn't mean that they won't renegotiate with Sprott or issue more equity to Sprott in lieu of paying. These are all options. But again, those kind of options are dilutive to shareholders. You see, we're getting to a commonality here, guys. We got a company that actually has no revenue. So to continue doing business, they have to continue raising money in the equity markets. That's dilutive. If you look at the 10Q and you look at the income statement, and if you're going to play in this market, you should familiarize yourself on how to read an income statement, a balance sheet, cash flow statements. These are kind of things that you need to really pay attention to. And what's really fun sometimes is the accountants will put little notes by the different line items, like note 1, note 2, and it's kind of good to go down and read what the notes are actually referring to. And we'll get into that in a minute. So their run rate on G&A, well, last quarter it was about $2.5 million. So general and administrative costs to the company, they're incurring about $2.5 million per quarter. That's a $10 million run rate. Oops. So every year they got to come up with $10 million just to keep the lights on. Doesn't include capital that's needed to advance any of the projects, acquire more projects, turn the Hobson plant back on whenever uranium gets to a sufficient price that they can actually mine in a cash flow positive manner. So these are things people need to keep in mind when they're getting involved in these companies. Don't just listen to the presentation that the guy is giving at the Vancouver Stock Promoter Festival up in Vancouver. You got to get into these numbers. Now, I found a very interesting thing, and I don't think this is necessarily bad, but this is one of the notes that's in their MD&A. Note 8, under the expenses, were Blender Media. They paid them $141,000 for IT, website, corporate media support. This person that runs Blender Media is directly related to the CEO, Amir Adnani. Now, I'm not necessarily saying that's bad or good. Sometimes, as long as it's disclosed and you know about it, well, you know. But they couldn't really pay the person, so they issued shares in lieu. So that's dilutive. It's not super dilutive. I'm just giving you a flavor of what you can find in the 10Q. And this isn't necessarily nefarious. It happens a lot of times where maybe this is the cheapest they could get and they still get a quality product. I don't really know. Sometimes I've seen companies where the CEO loans the company money at a high interest rate that's slightly below market based, or rents office space from one of the officers in the company that they own a property and it's still all market based and up above board. So I'm not suggesting that there's anything ill will here or nefarious. I'm just suggesting that if you get into the actual financials that are submitted, instead of focusing on the shiny apple that is presented on the website, you will see some things that kind of clear these things up for why they're having to issue shares and what's really going on. So let's just get to the bottom line. UEC will continue to issue shares until the uranium price rises to a sufficient level that they can begin operations and generate cash flow. There's no guarantee, guys, that this will ever happen. We don't know if the uranium price is going to go up, when it's going to go up, if it does go up, and to what level it will go up, if in fact it ever does go up. So that's why we're talking about these are speculations. These are not investing. That's why I say uranium stocks are resource stocks and they're burning matches. Now, that's a term that I got from Doug Casey from reading him before. And what you got is you basically have these companies consuming cash, telling a story, and, take a burning match or take a match, light it, and hold it and see what happens. Eventually it will burn your fingers. So that doesn't mean that we can't speculate in this arena. That doesn't mean that we can't make a tremendous amount of money here. What it does mean is that we have to understand the cyclicality, the volatility, and the fact that we're not dealing with normal businesses here. That's why this is not investing. This is speculation. We have to have a lot of things happen and go right so that we get paid. Okay, if you want investing, you can go buy an MLP, Master Limited Partnership Pipeline MLP, and get 8% guaranteed, 7%, pretty much not guaranteed, but or a REIT on real estate and get yourself 5 or 6% dividends. That's investing. Or go buy yourself a duplex and get rents on your duplex. That's investing. Putting your money into treasury bonds is investing. This is speculating. It's either all or nothing pretty much on these things. Either we're going to get paid off, or a lot of these things are going to go to resource stock heaven. It's just how it is, guys. And if you've got all of your money into these things, and if you are sitting back with visions of sugar plums and you just need to wait it out, you need to understand what you own. You need to understand what's really happening, and you need to understand that mining and resource development is capital intensive and extremely risky. And that if you have no revenue, if you want to keep the lights on, if you want to stay around until this thing turns into a frenzy, then dilution is the solution. And you just need to be prepared for that and understand. That's why I've made videos in the past, guys. I've made several videos about dilution, cash flow, or cash balances and understanding what the burn rate is for the companies you hold. What's burn rate? How much cash is your management team and your Uranium Junior incinerating per quarter? Call them up and ask them if you can't find it on the 10Q. Call them up and say, look, guys, you've got $10 million in the bank. How much are you burning a month? Okay? If they're going to do a financing, call them up and ask them, what is this money going to be used for? What's the travel expenses? Do you have, why is the CEO flying all over to all these conferences pimping this company? Why aren't we in an austerity mode? What is the plan? You can do that. They'll take if they won't take the call, if you can't get the IR person on the phone, if you can't get your questions answered, then you need to pass and move on. You will recall, and I've got a little bit of, I've got the needle on this from some people, people that watch the videos. Hey, I have some Uranium Juniors. I do not have all of my money. I have a speculative account, and in that speculative account, I have a few Uranium Juniors. But my overall participation in this uranium bull market so far is physical uranium and long-term calls on Cameco. That's it. Because until this thing really gets going, this is what you're going to have with all these uranium companies. Now, that works for me, okay? But what I'm saying is once this thing gets going and it goes where we think it's going to get going, who's going to be left standing? And can your management, like I've said before, get you across the desert to the promised land? And this is a perfect example right here. So people are butthurt, and they're like, well, you got to know what you own. We've talked about this. So I hate to say this, but the guys in Vancouver and Toronto are not our friends. And I'm not going to name names, but it's straight promotion. It's almost like a circle jerk daisy chain. I hate to say it like that. You've got people that promote companies, that are CEOs that promote companies. They are lockstep, nut to butt with these newsletter writers and people that do financings. I'm not going to name names. And how it works is they have conferences, retail investors come, or accredited investors come. They do private placements. The stuff is mentioned in newsletters. Rinse and repeat. All these officers and the CEO and management of UEC are still taking salaries as far as I know. They're still going to conferences. They're still doing what they got to do. They're still promoting, okay? Now, that doesn't mean that that's a bad thing or a good thing, but cash is being burned. I mean, these are not real businesses right now, guys. They're not mining anything. So this is resource stock speculating 101. This is how it works. I don't remember the guy's name, but he's a famous promoter from Vancouver that was active back in, I think, the 60s and 70s. And when he was referring to retail investors, I'm paraphrasing what he said, but it was basically something along the lines of, if a retail investor actually makes money in resource stocks, he's just holding it for us temporarily, which means is this is not set up for retail investors to come out making a ton of money. This is a insider's game. This is a game of relationships. Who do you know? How are you plugged in? I mean, Marin Katusa will tell you when he started, he was just running around, and he's one of the biggest promoters out there now. He's a multimillionaire, and he's in on all the deals. He gets the seat at the table. He gets the warrants. You're not getting that stuff. You're not an accredited investor, and you're buying on the exchange. And then when they do when they did this funding here, people that are on the inside got the deals. They got the warrants. You didn't. So I'm not saying it's a bad thing. It's not illegal. It's just you have to know what's really going on. You have to know the game. It's like George Carlin said. It's a big club, and we're not in it. That doesn't mean we can't take advantage. It doesn't mean we can't make money. It just means that we have to really understand what's going on and understand the rules and understand what we're doing. I mean, if we're going to be taking apart bombs, we just don't rush into it. You get extensive amount of training. It's a high-risk deal, and you have to understand the risks, and you can still do this safely and profitably. So this is the message I wanted to get out. Like I said before, I'm agnostic. Don't write me. Don't say I'm beating up on Amir Adnani and UEC. I don't care about it. I don't know this person. I don't know this company that well. I don't own this company. It's not because I don't like it or have any bias towards it. I just haven't really looked at it. But I wanted to address this because there's been a lot of discussion about it, and I've been getting emails and DMs. And this is a perfect educational opportunity. So guys, it's what you got to know what you own. You got to do some work on this stuff. Don't just listen to gurus and newsletter writers, even though I'm one. I don't, who the hell am I? You don't know me from Adam. You couldn't pick me out of a lineup. This goes for the rest of them too. I'm just trying to get out there and get you the information. And yeah, I have a newsletter that I'm marketing. I think it does a pretty good job. I think I'm honest about my losses. I think I'm honest about my limitations. I think I'm, above board. But I'm not a guru, and I make mistakes, and I'm not on the inside. So I just wanted to get that out. I'm sorry if I offended you, but that's, that's sometimes we got to hear the hard truths. I've been through this, guys, over and over and over. It took me a while to figure this out, okay? It's easier if you just listen to me and read these 10 Qs yourself and start educating yourself. Don't just blindly go into this stuff, or you're just going to lose your ass. All right, that's it for this week. Guys, we're starting to get up there on the subscribers. I'd like to get this thing over 1,000 subscribers. If you're not a subscriber to the YouTube channel, could you subscribe? Do me a favor. I'm not asking you for any money on that deal. Just hit that subscribe, hit that bell. My Patreons, people are supporting me on the Patreon. Please understand how Patreon works. It's like patronage. Like back in the Middle Ages when Michelangelo went and painted the Sistine Chapel, he had wealthy patrons that helped him, that gave him money over a period of time so that he could do his work. So when you subscribe to my Patreon, you are encumbering yourself or agreeing to do a monthly support. You can cancel it at any time. You can do a one-shot deal, or you can do it monthly. I appreciate, I'm not asking people to do it. If they choose to do it, it's a way to support me. As an incentive, I have said that I will give you the current month's stock pick. That's a one-shot deal, guys. There's been some confusion on that. It's a one-shot deal. I will give you the current month's, it's not a subscription. You don't get the newsletter. You just get the current month stock pick so you can see what we're doing. So you can see what kind of stocks that we're recommending in the actionable intelligence alert. So I also want to make that clear. I do appreciate the patronage. If people want to do a one-shot deal, I'll send them that. If they want to support me over time, I definitely appreciate that. There's a lot of work that goes into making these videos and doing the other work that I do. But, any help is appreciated on that. So, again, the Actionable Intelligence Alert newsletter is available. I think we're starting to see a turn in some of the things that we're following there. I don't have time this week to get into the oil markets, but that continues to look good. And if you want to support me on that, if you want to take a subscription, please feel free to subscribe. So that's it for this week, guys. We'll talk to you next week. Thanks a lot.